Sometimes the closing print with Brent and Dennis can be subdued. We're out of earnings season, not big imbalances. And then sometimes it's absolutely crazy. Well, 3:30 to 5 yesterday, especially after hours, we had some crazy action in Google, Apple, a lot of other stocks affected by that verdict. Did it come out of the blue? I don't know. It's been going on for like 10 years or whatever. We're going to cover that in detail. We're going to get to some earnings. We're going to have Jay McCannless join us at 8:35 to cover the housing sector. What could be better to cover with interest rates going back down to zero? It's hump day on pre-market prop. Let's get fired up.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, that closing print in the S&Ps, that's your low of the day. We're up 25.5 handles, 64.51. Thanks to the big guns, Apple, Google, moving much higher. The buck pulling back yesterday. It had a good day. Today, just pulling back 6 cents, 98.28. TLT, they don't take it. TLT traders don't think interest rates are going lower. Down 26 cents, 85.37. More supply coming on the market. Crude down $1.65 at 75.16. GLD breakout yesterday, adding to it up a buck, 326.52. Silver, big day yesterday, pausing today, flat at 37.12. And Bitcoin doesn't want to be left out in the rally, up $820 at 112,200. Let's bring on Triple D and Triple D. I guess we can bring on Brent too here. I mean, sometimes you get news and then sometimes you get huge news. And boy, Google tacking on $12.
Yeah, well, and it's not just Google. This news was absolutely out of the blue for sure. We were in the S10 room. We're like, what the hell just happened to Google? And then it ran up like $8, and then it went all the way back down and went red. And I was like, was that just a blip? And then Apple started going off, and then the Google started going off again. We're like, what's going on? And then we saw it from Reuters, and we'll throw it to Brentster here now, breaking the news as always. Give us the highlights here. I mean, this big ruling here, obviously moving two of the biggest stocks in the S&P.
So this ruling, we should be clear here that Google was found to be a monopoly earlier in this case. I think it was at the end of 2023 or 2024. What we heard last night was the results of like the consequences of the fact that Google was a monopoly. So there was some important implications here for Google for sure, some important implications here for Apple, maybe even for Microsoft. A few of the highlights here. Again, Google's consequences for this monopoly on search. A U.S. judge ruled Google must share information with competitors to remedy its online search monopoly. Judge barred Google from exclusive contracts for internet search. That was the second point. I'll make these on my fingers as I'm going through. A judge rules that Google is not required to cease payments to Apple and others for preloading Google products. U.S. judge rules that Google will not have to sell off its Android operating system, will not have to sell off its Chrome operating system. Those two are huge implications, obviously, for Google to maintain this business moving forward.
So big moves in Google, and it was up substantially last night. It is off those highs, and you know, I'm still not a fan of chasing. I know it was up almost 20 points last night. It has peeled off, only up 12 now, but it is big news. But it's not only big news for Google, it's also huge news for Apple here, Brentster. Do you have a little bit of color there?
Yeah, so we were digging around. We're like, oh my gosh, you know, like Google was kind of chopping around a little bit. Apple didn't really like chop around. It kind of just moved straight higher. And I'm not sure, Dennis, if you were more surprised, like in awe of the Google move or the Apple move.
There were incredible moves, and Apple, incredible moves here too. Like I was just saying, the market cap creation that is happening here right now is astounding when you see two big S&P components moving that much. So, I mean, that's where the S&Ps have got to go higher, and they were just lagging a little bit, and why we thought maybe some other things were going to be down with rotation, which we'll get to here in a second. But, the Apple, it is really good news for them. Morgan Stanley may be adding the best color from this morning here. Thank you to Street Insider for the note. A near best case scenario for Apple, Morgan Stanley is calling this DOJ ruling. So obviously it's on Google, but they have the partnership here with them with search. Morgan Stanley, digging into the note here a little bit, said that this ruling was a near best case scenario for Apple, and the company can still collect TAC payments from Google and can renegotiate the default search socket annually. The ruling, Google, okay, so here's best. In layman's terms, this means that Google can no longer be Apple's exclusive default search partner for multiple years, but that Apple can continue to collect traffic acquisition payments from Google to distribute search. These payments represent $25 billion in annual revenue for Apple with 95% margins. So these payments go directly to Apple's bottom line. So those payments are now safe and intact, and obviously they can renegotiate. So that's what they were saying, why Morgan Stanley is saying this is a near best case scenario for Apple, and that's why the big pop here this morning. They are raising their price target objective on Apple, or Bank of America. They're talking about Bank of America too over here in another note. Bank of America echoed the view, calling the ruling a win for Apple and raising its price objective to $260, citing increased confidence in services growth. So huge, obviously huge, for Apple, huge for Google, huge for the market because the S&Ps are moving up here overall.
It sounded like Morgan Stanley had like a nominal value for the implication, $25 billion. But Dennis, we heard last night that a fifth of Apple's service sales were tied to like Google search. Services
so
are
20% of their service sales, and services is how much of their overall revenue?
Like 30% of total revenue.
So bottom line, this is 6% of Apple's revenue that was in jeopardy. That all goes to the bottom line because they have 95% margin on this 6% revenue. So this goes directly to the bottom line. So it's huge for Apple that they obviously can continue. Now, this doesn't mean that Apple's actually going to grow off of this. It just means that there was worries that they were going to lose these payments. Those worries are gone now, and there's a potential to renegotiate this annually. So those payments could go up actually, after every year. That's it. That's the big news here. So that is what is driving price. And then you look at Apple up 3.74%. You look at Google trading up 5%. You're like, holy crap. It's going to be a huge day for the S&P. For whatever reason, they decided last night on the SPY, Joel, that they were not having much of it. I mean, SPY was up a bit, and SPY was actually barely up overnight. Like it gave back a lot of it last night.
I know.
Night on the futures. Did we go red on the futures?
You know what? I looked at all the after hours action, and of course that after hours action, it really affects my levels and the way I look at things. And I'm like, you know what? Maybe it'll come back down to unch. I was just thinking, maybe overnight some, willy-nilly comes in. It went exactly back to unchanged.
We went to unch on the futures.
Unchanged.
Bring up the futures,
I can't
you won't see that on the SPY because it was closed when it went unch. But
yeah, it was. I mean, you had to be. It was just after mid. No, where was it here? It was 2 a.m. I mean, you had. I mean, you either had to have your order up there, out there, or just wake up at 2 a.m. I cannot believe it went back to unchanged. And
you've got Google and Apple, which if we just go and this is ETF effects, and we're going to get into this, and if you're not pay attention, because this is where you learn here, ETF effects are the biggest driver of price that there is anymore. Like it's what matters. Bob Pisani with a good article yesterday talking about not just ETFs in general and how many there is. We're going to go in and talk about the effects here because the effects are absolutely enormous. I mean, just on SPY, and we can just break it down. So Apple is 6.24% of the S&P. And Google, when you combine them both, which you have to do, is around 4. So you're talking 10% of the S&P. 10% of the S&P trading up, if you put them together over 4%. So then you can look and say, well, then S&P's got to be up 0.4% just for Apple and Google. Well, the S&Ps are only up 0.4%. So what's that mean? It means some other stocks are going to have to go down. Do the math. Because everything else as a whole has to be flat. So you got two stocks that are going to make the S&P go up what it is right now. They're accounting for that. But you've got the other 498 that have to be zero added up altogether. So what do? Well, they've got to sell the obvious. The first thing, which we were saying last night on PreMarket or on SDN, is they're going to sell staples probably because they're defensive and they probably want to go opposite anyway. So that's easy, low hanging fruit. They're probably going to sell healthcare. They're probably going to sell utilities. You automatically think those, the defensive natures of it. But I'm like, it's not going to go far enough. They're going to have to find other things to take red. So, so last night we were saying financials. Financials are red here today. Oil is down. That's going to help because oil's down and OPEC is talking about supply increases. So that's going to help a bit too. But I mean, if you think everything's just going to be rip roaring and rallying here because you've got Apple and Google, when you look at the S&P, Google and Apple are almost the entire gain of the S&P themselves. So for the stock, all other stocks go higher, the S&P has to be up more. That's why it's so absurd, Joel, that the S&P futures actually went back to
I never thought that.
That would mean all those other stocks have to really go down. So just breaking down and digging into the ETF effects, and if you want, we can do the same thing with the Qs. Those Qs non-tech components are probably all going to be down. You can look at T-Mobile this morning. T-Mobile trading down $2. Why is T-Mobile down $2? Well, it's in the Qs, and they need to make up the difference somewhere. So those non-tech components go down. Starbucks, going to probably be down. Comcast, going to probably be down. Gilead, going to probably be down. Did these companies do something wrong? No. It's the fact that the ETF effects control everything. So if you don't pay attention to ETF effects, you could get totally caught off guard. You could be like, oh, yeah, it's going to be a great day. I'm going to go buy some of these stocks and these stocks. No. What's going to happen here today is the 498 are going to be flat if the S&P stays where it is and Apple and Google stays where it is. Now, if Apple and Google tank, that's a different story. But if they stay where they are currently, those 498 stocks are not going to have a great morning. They're going to be flat because S&P entire gain is Google and Apple.
Joel, are you showing us?
Yeah. Just to illustrate,
Yeah.
This is something, you look at all the time here, right? These are the triple Qs. You just got to look at the other stocks and see how they're doing. You're going
to get some of the tech stocks that are going to trade higher because they want to bring Zscalers up, and they're going to want to bring tech up with this. So that's even more pronounced going to be negative effects on the non-tech components. And what do we mean? If you're just joining the show for the first time, we've talked this for years. There's 25 stocks in the Qs out of the 100 stocks that are not tech stocks. Everybody thinks of the QQQ as the tech index. It is. But it has 25 stocks that are non-tech. It has KHC, Kraft Heinz, is a component in the QQQ. It has Monster Beverage. That's not a tech stock. It's in the QQQ. AstraZeneca is in the QQQ. It's up. It's doing its own thing in the Europe, so it doesn't have as many effects there. Honeywell is in the QQQ. Is Honeywell a tech stock? No. Is Honeywell likely to go down today because all the tech stocks are too strong? Yes, I would think Honeywell has a weak day. PreMarket is saying I'm right because PreMarket's already got it trading down. It's been trading down the 215s it was last night, which was down over $2. Not Honeywell's fault. They did nothing wrong, but simply Apple and Google are too strong for relative to where
all these stocks are in the red. I'm just going down the list here. They're all in the red. They are all in the red.
This stuff matters, folks. It matters. It matters. It matters. It makes money. And you know what? RSP does tell a good story here. RSP, folks, is down. It equal weights it all. So it'll take the weighting of the S&P of Google and Apple and just give it a weight equal to everything else. And that's why you're seeing actually the RSP trade down 0.2%. So there's your real story of the day. So this is important. This is why we're different on this show, because we talk this stuff. We understand this kind of things. We make money. Why do you think I'm so consistent every month? Because I respect ETF effects. I trade ETF effects. It's the most consistent trade out there. 99.9% of the population's trading population doesn't have a clue what I'm talking about right now, but you guys do now because you're listening to the show and you're learning and we're educating. And these effects matter more than anything.
Dennis, one thing last night was like the SDN after hour show is so interesting and fun because it's so interesting watching you react to this stuff and like the intensity of the moves last night. like,
So
and the
intense.
breath, like, so intense, and just like across the board moves for the most part. It really seemed like this news last night caught the market off guard. It seemed like the way stocks
Wasn't
were
ready
moving
for it,
last
no.
night, it seemed like desperate. Like they were desperately going like, oh my gosh, we have to get into Apple. What can we sell? Let's do that now. I don't care what it costs us. So, you know, Joel, like one of the main things that you were kind of like asking about this morning when we were talking about this topic is like, could we have gotten ahead of this news item? And we had expectation that we were going to get the ruling like by the end of August. So like Mitch was saying that, you know, like there was some uncertain, like a little edginess last week because people were kind of like waiting for this case. I don't know what the difference a week makes between last week. Maybe the market was kind of expecting it last week, and then it seems like this week it was kind of caught off guard. But like we get so much information from the trading, from the price action. A lot of this stuff that we're talking about this morning was pretty much just from watching these stocks trade and rotate.
And the rotation was happening live. It was so exciting to watch the rotation trade live, and it always is. When you come in this morning, the rotation has already happened. But we're watching it rotate. We're watching the algos go start hammering all those non-tech components of the QQQ at the same time. How do we know it's algorithmically? Because I have scanners looking, and all the bids get hit at the exact millisecond. Ding! They go like that. Ding! Well, that's not individuals saying, oh, I feel bearish on Comcast today. Oh, I feel bearish on Gilead today. That's the algos going, ding. Now, there's not a lot of them, but that's a smart one. We talk about how stupid algos are all the time. The overshoot ones are pretty stupid. The arbitrage ones and the ones that are doing ETF effects, those are the smarter ones. Those are the ones that make money consistently. Those are the ones you want to follow.
Can you do the sound of a smart algo versus a dumb algo?
That's a good one.
What's the smart one?
Oh, ding, ding, ding.
All right, Josh, if you're listening, cut that one out for sure. I will just say, overall, I've been lulled into complacency by this whole stuff. I mean, how many times do you hear these lawsuits and these things going on? I mean, obviously, someone had an inkling. Someone's been following Google for a long time, and I don't know if it was earnings or whatever, but this thing has just been a beast, even when the market sold off, right? And, you know, someone says, oh, someone bought some calls on the close or whatever. People have been buying into this and anticipating this for a long. That stock was just a beast even last week. So now the only, you know, people wanted I can only give you one number, and that's the pre-market high, and that comes right near 230, 229.90. I mean, you $5 off that. To me, between 225 and 230, I'd be a natural seller, but I don't own the stock. I'm not shorting the stock. So that's a look. And then for Apple's a little bit of different story. I know I pronounced Apple dead yesterday. Well, I just got kicked in the face. Pre-market high comes in at 239.46. That comes near a whole number 240. If you're holding out for the monthlies, the next monthly high is 244.03. And is this the catalyst to take this to new all-time high?
Maybe.
I'm not going to say it's not. That's 260.10. Not today, but
not today.
Huge catalyst.
And has Apple, like, they've just benefited from the random good news tape here right now where, you know, they haven't really done anything themselves, but, you know, getting the invite to the White House, getting, you know, behind Trumpster, getting behind Apple, you know, Tim Cook, and then obviously, you know, they get the good news from Google here. I mean, they haven't really did anything yet to drive revenue, but they are bumping higher. And the one thing I will say is there is chatter here, and it's just chatter right now. But next Tuesday, so, you know, 6 days from now, we're going to get the Apple product, you know, day there. And they are talking about unveiling new AI products. If they are really cool, Apple has that potential to get to that all-time high. If they're just basically more apps and just improving your iPhone, I think the stock goes down. So we do have a potential catalyst to drive Apple. And the chatter is there is multiple AI products that Apple is going to unveil next Tuesday. Sorry. So that is important information to consider here when you're coming in and saying, I'm just going to short Apple at 238. You are now running into catalyst trading time, where Apple often runs up to these events. And it is very much anticipated, even the chatter there on the weekend on Twitter, people talking about potential AI products for Apple. So if they come out with something really cool, or if there's the hint of thought process, and we know sometimes this stuff leaks, this could be one of those gap and go scenarios. So I don't know if I'm necessarily just coming in and shorting the gap in Apple.
I love that point, Dennis. Great call. Joel's got on the screen Reddit. And Dennis, like, you and I didn't really talk about this, so maybe we'll get your reaction a bit live on air. Reddit was moving late last night. Did you catch this, Triple D?
No, was there Catalyst news?
I didn't see anything. Reddit didn't move until like quarter after 5 p.m. And it moved, and it's remaining over 225, 226 here. I was kind of speculating, is there an implication with Google? And maybe. And if you want me to do the crazy speculation for y'all, is there some kind of chance that Google could be doing more robust partnerships?
They have something with Google and Reddit have some kind of deal. They do.
Well,
I don't know all the.
I think it is up on the Google News. I agree. It moved at the same time. They do have something going with them, and I don't know all the details of Reddit because I don't follow the company that closely. I obviously know what they do, but I do think that it is like the movement was almost the same time. So I've got to think it is off of the Google News here, that there is stuff that's off this relationship here. So keep that in mind. If you guys know in the chat, let us know, because I don't follow closely enough all of Google's relationships with like everyone. Like, I mean, search trends and stuff, you know, obviously Reddit is being used in that too. So there's definitely overlap here as well. I'm not sure why it's worth this much for Google. If you know, if you know, let us know.
You don't need to know. You need to know the price. And
data licensing for AI training, EKS says. So throw that up on the board. That sounds like a pretty good one here. Google and Reddit is in a multifaceted agreement primarily focused on data licensing for AI training. So that could be it.
The move, I will say, the move in Reddit was around the same time.
Tennessee's saying Google contacted Reddit. This is why our chat's awesome. Main reason why we do show.
Absolutely.
We got a tank here. There's now currently 1,184 people listening to the show right now at this moment in time. And, you know, we're brainstorming together, and, you know, we're seeing, you know, this is obviously up. So we have, you know, Richard, Tennessee, everybody informing us, because we can't know everything. So it's nice that you guys come in and inform us. So yes, this is absolutely already there. And obviously we're getting, you know, now the fundamental confirmation of what we see in the tape.
And I will say the price action in Reddit being a little delayed, like it might have been like 30 minutes delayed before we saw price action in Reddit. To me, that seemed like a human digesting information, that delay. It didn't seem like a Google.
Yeah,
the
algos seem like the algo
reacting late.
Can.
Yes, exactly. Exactly. Yep.
Yeah, great point.
Okay, before we move on to this, yesterday I said I thought the high of the day was in, high of the year was in, and of course our astute chat coming at me hard. I will say, if you didn't like the price action yesterday, and you think the all-time or the high for the year is in, today's a pretty important day. Two things. One, we got back half of this move. From that break from the all-time high, comes in at 64.50. So solid close over 64.50. Good. That means, hey, we'll build a little base there, go back up to all-time highs. Also, we filled the gap from Friday. Now, I know I've gone over this a ton of times, and, you know, the day gap and the overnight gap. Well, the way we cut through the low on my Globex session, there's no gap. But the low from Friday last week was 55.50, so we're back up to that area. But I did say I hope I was wrong. That's what I said. I said, you know, can't make a bearish call in this, Chad. But anyways, I think we covered.
It's hard to be bearish this market. Like, we keep wanting to be bearish, and we're trying to be bearish yesterday. But you know what? The tape yesterday we talked about, it was an ugly day for the S&Ps. But then we talked and broke it down in the STN room. We said, hey. It wasn't that bad of a day yesterday. We're going to get to Zscaler in a second there, but let's talk Palantir. Palantir with a nice bounce back, open at the lows and bounce back.
A lot of stocks
trade
did.
not going away. You know, you're starting to see other names even perking up. Even GameStop was perking up yesterday, Joe. Open, OPN, or, you know, Eric Jackson obviously doing his stuff over there, continuing to promote this stock wherever they possibly can. That stock opened at the lows and ran and ran and ran and ran. So, I mean, retail is not spooked here yesterday. They came in buying the dip and they went to their darlings. They didn't go to some of these other stocks, but they definitely went to their darlings yesterday. The Palantirs, the Opens. There was a bunch of other Momo names. Even Tesla was down significantly at one point in time, and it bounced back from the lows as well. AMD and Nvidia were down. AMD hit 156, open near the low, or 150, 156.62, open near those lows, and then bounced. So the darlings are getting some love. They were down for a couple days, but they're leading the charge back. Again, hard to stay bearish.
Well, we were talking about it, you know, after the open, and it was like, you know, the bears did what they needed to do. They took out the pre-market low, they instilled fear, you know, and they pressed like 3 or 4 times, and they made that low, you know, 9:30 to 10 area is just so important, and they just kept pressing, and they kept pressing. Even around noon, they pressed it. They took it down there again and made a new low, and the bulls just kept fighting back. So a good seesaw battle here. You know, we're also leading up, you know, to the jobs number. We have some, you know, other data coming out this week. But hey, just to sum it up, man, when you have Apple and Google trading up 6%, Apple trading up 3.6, you know, like, what are you gonna do? You're like, oh, that you don't think about, oh, stupid verdict or whatever. This is the price action. This is what's happening, and we'll take it from there. It is 8:27. Should we talk about our fourth stock of the day, Zscaler?
Yeah, we have some earnings. Zscaler, Macy's, Campbell's, and Dollar Tree. Those are your main earnings here. We'll try to cover them all here. Zscaler did report earnings last night. Was up substantially, has given back a lot of those gains. 89 cents versus 80 is a beat on the bottom line. 719 million versus 706 million is a beat on the top line. The guidance is slight bump, and I mean ever so slightly. Analyst estimates were at 84 cents or at 85 to 86 for Q1. 2026 a bigger jump in guidance, so 364 to 368. Analyst estimates were down at $3.18. So not bad for Mr. Zscaler. Zscaler, though, with the big pop in and then the subsequent drop, actually went red last night for a little bit, has come back and now is green again.
Okay, 13 and 15 is 28 when I went to school. So there was a pretty big expected move there in Zscaler. It doesn't look like we got really near any of those boundaries. You did get the after hours high at 284.56, after hours low under 270. So option sellers, straddles win again so far in this one, big time. But let's just focus on the price action from the last few days. And you're still right there. I'd still call it, you know, 284, pretty good resistance. That splits the highs from Thursday and Friday. And the lows, well, you did get under 270. What did I say the pre-market low was? 268.54. That's right around a low that you had last week, I believe, at 267.51. So
okay, Macy's reported, and they blew it away. Actually, Macy's is lifting here, and we know some of these stocks that have been in the gutter are starting to show a little bit of life. Kohl's been showing life here for a little while as it's become a retail stock here. Macy's trading up substantially after reporting earnings this morning, and they blew away the bottom line, 41 cents versus 18 cents. Also 4.81 billion versus 4.76 billion, beating the top as well. They bump up guidance. They're looking to make, they were $1.60 to 2. Now they're going $1.70 to 205. So it's just a slight bump, but they like it popping up here. I mean, the stock makes a lot of money. They make possibly $2.05. You can do the PE on that thing. It's very cheap. 4.84% dividend as well. So if they can continue to get people coming to these stores and continue to make money like this, it's still a cash cow, even if you don't think there's a lot of growth. But market this morning, like in the Macy's earnings, it is up 12%.
Will it over the expected move of $1.30? So when you get above the expected move, two things can happen. It comes back to the expected move and holds support, and then continues higher, or it starts to come in a little bit. Right now, it looks like you got a relentless bid up $1.70 at 15.19. This takes you all the way up to, if I had to give you resistance, what would I give you? I would give you two levels. I would give you 15.26. That was your high from February 25th. And then this is called the February 21st high, 15.66. A really good number.
Your left chart not showing the pre-market action here, Joel. Maybe you got to adjust parameters there because I do not see it.
Oh, I did it. Yeah, because I put the futures up there. Thank you.
Yeah, Joel's going to change that for you right now. So we're sorry you're not seeing the move in Macy's here.
There you go.
That looks better.
Oh, I should have bought the other chart and then flipped to this chart. Okay, there you go.
Yeah, there you go.
You got there in the pre-market.
Wow. Okay, moving quickly on here. Obviously, Kohl's can benefit from this. Kohl's the retail darling here as well. Now up at 16, slowly climbing back. The wall of worry for KSS. It is coming back. Don't call it a comeback, but it is. Dollar Tree reported earnings here. Dollar Tree, not really as kind of stock that they're going to buy on a day like this, but the earnings were okay. Actually, not even bad at all. 77 cents versus 41 cents. Is that right? These numbers look pretty darn good. 4.56 billion versus 4.48 billion. They raised guidance as well. 515 to 565, up to 532, 572. Holy crap. Net sales were good. These numbers are all really good. You want to know what the problem here is? ETF effects. This is just not the stock that they want to buy today. And it's a stock that's also been running a little bit. We were $80 3 months ago, so it's come up a bit. But I'll tell you, this report, just looking at it, is not a bad report. I think it's mostly ETF effects that are knocking this down. This wasn't a bad report. Bad day for it to report.
Yeah, this is over the years looking at different stocks. This is a little bit more difficult to get a read on because it's a wild child. But if you wanted this stock back at the 105 area, like several people did back in mid-July, well, here's your opportunity, and actually even lower. So keep an eye on that. See if it can catch a bid at the 105 area for Dollar Tree.
And then the last one is Campbell Soup. And not really the stock that they want either, but you know what? It's doing okay here this morning. It's slightly up. CPB reporting 62 cents versus 56 cents, 2.32 billion versus 2.33 billion. They see adjusted EPS 240, 255. That's kind of in line. So it's not bad. Stock is trading up here slightly. Campbell's with a 4.88% dividend here is nice as well. Stock's just a food stock though, and not sexy, not really exciting whatsoever. Just boring food. I don't know. Hard to get excited about this one.
Okay, I gotta digress here from the online because KHC yesterday absolutely got annihilated.
That split,
and we were thinking, yeah, breakups, they usually like a lot. What a great breakup. Two's better than one. And like, wow, this is not even going unchanged. It was barely unchanged. And then Warren came with the knockout punch. He doesn't like the deal.
I don't like it.
Will that make them reconsider? I'm just throwing it out there.
No.
I mean, no.
It won't make them reconsider. They're not liking the spinoff, and Warren Buffett didn't like it. We did get Morgan Stanley upgrading the stock this morning to equal weight, so it gets a little bit of a pop. It does have a 6% dividend here too. So I don't know. I don't know what to say about this. But when Warren comes out, doesn't like it, I usually follow the Oracle, and I'm probably not going to like it either. Our guest is waiting in the background. We can bring him on here. It's 8:34. We're going to run that intro. Get to our guest.
Jay McCannless, Managing Director, Equities over at Wedbush, covering the housing sector, building sector. Jay, how you doing today?
Doing well. Thanks for having me on.
Oh, love having you on. So we'll just start. We'll go right for the jugular. Interest rates are coming down. Hooray for the housing stocks. They've been moving a little bit ahead of us. Talk about the interest rate environment and the effect on this sector.
Yeah, so interest rates have been moving a little bit down. You're right about that. We'd like to see them more with a 5 handle on mortgage rates rather than the 6 handle we have at this point. That would help builder profitability. But I think what we've heard from Toll 2 weeks ago, what we've heard from some of the other builders is that foot traffic, physical traffic, as well as web traffic into the communities has gotten better. There's a lot of people, both whether it's millennials or the Gen Zs, that need housing right now. They need shelter, and whether it's rental shelter or for sale shelter, there's a lot of interest and demand, especially as prices come back to hopefully more affordable levels over the next few months. And I would say that the names we like right now, we're being a little more cautious in terms of what we're picking. We like names that focus on luxury buyers, active adult buyers, people who may be a little less payment sensitive than your entry level buyer. So we like Pulte on the large cap side, as well as Toll Brothers. On the SMID cap side, we like TPH, TriPoint, as well as Taylor Morrison, TMHC, and MI Homes, MHO. Those are some SMID cap names that focus a little more on the move up people, again, who aren't as payment sensitive as maybe your average Horton buyer or Lennar buyer might be.
So you gave us some of the higher end names here. One thing I've been thinking about the housing stock in our country is just the overall, I think family sizes have come down, right? And the houses, these colonials, these 3, 4, 5 bedrooms, I mean, all the extra space. Who is and I think the demographic trends have been supporting this. Who's in that market? Who should we be keeping an eye on if these younger people are having 1 kid, maybe 2 kid, they want more of a compact ranch than these big colonials. What housing stocks cater to that more, and not on the high end, but like the middle end, people moving up the spectrum?
Yeah, absolutely. So we're new traded on these names, but if you want to focus on that smaller footprint buyer, DR Horton, DHI, it's the largest home builder in the country. New traded on that name, but that's a middle of the road builder. I would say Lennar also. And I would also give you a micro cap name where we are outperform rated. Beazer Homes, BZH is the ticker there. That's another one that focuses on the smaller footprint. Because I think you're right, Joel. I think the large house with the large lot, that's a thing of the past, especially with mortgage rates. My first mortgage rate had an 8 handle on it, but most of the people who are buying homes right now are thinking about mortgage rates in the 6s as being egregious. So to meet that need, I think you have to look at some names like that. Would also on a new traded name also, but LGIH is another name that focuses on maybe the more starter, smaller homes, smaller footprint, like you're talking about.
Jay, what about just talking, inflation and building costs here? Because, I went through home builds here, and I know building costs have risen substantially since COVID, 2019, 2020. Everything is up, from where it is. And obviously, you just can't build a home as cheap as you have been able to in the past. And then you think about tariffs. I don't know, some of these, home builders may be importing lumber. Maybe they're importing some other stuff as well. Do you think inflation has concerns here if we see it start to tick up in the second half of the home builders?
What's interesting is we made kind of a soft call about lumber prices, thinking that the Canadian import duties and import tariffs that were recently increased, we thought that was going to prop up lumber prices. It hasn't really panned out like we thought it would, but at the same time, I would say if you look at things like copper, you look at drywall, cement, we've seen prices on those go up, not necessarily due to tariffs, but I think just in general, you think about data centers and what data centers need. Right. They need lots of concrete, they need lots of copper. And so that demand for things unrelated to single family housing have actually started to move prices up, for construction prices up for the builders. I think the other thing, the good news though, is that there's a lot of labor available now that multifamily has slowed down. A lot of those contractors that build multifamily can also build single family. So we've seen some savings there. I would say that land prices, which if you think about your cost basket, land is your most expensive thing. Land prices are still going up, but they've slowed the growth rate has slowed dramatically. So it's not all bad news for the builders, but I think you're absolutely right. The cost of building a home has gone up, and I think with what's going on with data centers and even just public projects in general, whether it's airports, bridges, etc., some of those core components to building a structure or building a home have moved up in price. So we'll see with the tariffs. To this point, I think a lot of that's been covered under USMCA under and Trump has been very vocal about keeping the USMCA potentially those goods, keeping those cheap, but at this point, it hasn't hit the builders as hard as I think some people expected. But it's a thing where we'll see if the builders have a lot of standing inventory right now. I think if I'm worried about anything, it's how much new home inventory is out there. It's an inventory number they can clear pretty quickly, probably about 3 months. But I think near term, if there's any headwind to profitability, it's just working through kind of this glut of unsold homes that the builders have.
Joel is on mute. Joel, you hadn't done it in so long. You were on a roll. You hadn't muted your mic in like a week and a half. It's like a
It's
roll
been longer
for
than
him.
that. Okay, Dennis.
Longer than that. Your streak now starts at 0 again. Okay, sorry, I'm done picking on you, Joel.
I'll yell at you later. Builder's First Source is what I was talking about, and that stock, I mean, way off its all-time high, bounced off the low. You could say not fully participating here. Give us your short-term and longer-term outlook for Builder's First Source.
So Builder's First Source is the largest building products distribution company in the country. They have about 12% market share of all building products that are sold in the U.S. We think that helps insulate them from some of the higher lumber prices that, again, we made a call that lumber prices are going to go up. Hasn't really happened. But if it does, we think that market scale or that scope helps protect them from eating all those price increases. I also think if you're bullish and you think mortgage rates are going to come down, you think we're going to see starts growth next year versus single family starts probably being down mid-single digits this year. Builder's First Source is the best way to play it, and not having to take the land risk with the builders. That's typically how we pitch this stock, is that if you're bullish on starts, if you're bullish on housing in general, BLDR is a way to play it without taking the land risk that you have to accept with the home builders.
Okay, so going into housing, right? People buy houses, right? They have brokers, they have mortgages, right? And then you have sellers out there. You have Rocket, you have Zillow, and I see Zillow is in your area coverage here. Give us your outlook for Zillow.
Yep, Zillow is, everyone knows Zillow. Everyone knows estimates. Zillow, if you talk to them, would say that they would say they were the earliest adopter of AI as it relates to language learning models and building out the Zestimate platform. I think the thing that they don't talk enough about is all the other software packages that they've been buying and software companies they've been buying over the last 10 years. What Zillow is doing is basically trying to take humans and take as many humans out of the real estate equation as they can, whether it's people who schedule, open houses, people who are doing appointment scheduling for basic tasks like closings, things like that. Zillow has bought a lot of that software. They also have bought software and are selling it to different MLSs to compile listings each month, to compile the data that all of us look at. So one of these days, we think Zillow is going to start talking about that software revenue. They do talk about it in their SEC filings, but not as much in their public-facing disclosures. So we feel like there's a software story to be had there. But at the same time, it's also a top 5 real estate search engine. Everyone knows the name. Everyone loves to go check the estimates. So we feel like there's a lot of good news in this story, but at this point, they're not willing to show us enough to really start talking about the software angle of it. But that's what I've been focused on. It's why I think the stock at these levels, even though it's come back and is close to our target, I feel like it's a name worth investigating at this point.
All right, let's talk about the new kid on the block. Or I don't know if you want to talk about it at all, but competition for Zillow. And I just, like I don't think it's in your area of coverage here, but Open Door getting a lot of news here. Positive or obviously maybe a negative impact on Zillow.
Yeah, I think for Open and we talked about it in our industry note today. Investors, I think maybe are starting to get more active in this market. Don't really have a view one way or the other on Open Door, but it seems like housing prices may have come down in certain areas that's enticing the investor crowd to come back into the market. I think home prices, especially in some of the larger markets, got ahead of themselves and made it to the point where it wasn't profitable for Open or OPAD or any of these others to buy homes and fix and flip. But now we've seen some price retracement in certain markets, and I think for potential investors, they're seeing a little bit of value. We'll see if this keeps up. I mean, the number that came out in July from the NAR, roughly 20% of July's transactions were investors buying homes. And that's the highest number we'd seen since February of last year. So we'll see if it keeps up, but it's an interesting trend to keep an eye on. But yeah, no official opinion or no, we don't cover Open or OPAD, but it's certainly names that we keep an eye on, just given some of the house price retracement we've seen.
Got one more for you here, Jay. I do see that you still follow Fannie Mae and Freddie Mac. Obviously, these traded over the counter here for a long time now. Is there a way that these make it back onto the actual exchange here eventually? They took them off back after the financial crisis here. I like trading these two stocks. That's why I'm asking almost for myself, because I'm a trader. Is there any way that these companies find their ways back onto actual stock exchanges?
I think if you look at some presentations that are out there from some larger investors, there have been some discussions between the GSEs and the NYSE about potentially returning to the big board. I think for larger long only investors to own these names, they can't own pink sheet stocks. So anything that the GSEs do to get themselves, whether it's NASDAQ, NYSE, wherever, to get themselves back onto a larger exchange where some of these larger long onlys can own the names, wouldn't hurt. I have no idea where those discussions are, but I'm like you. I think the more notoriety, the more prestige they can start to bring back to themselves by being on a larger exchange than the pink sheets would certainly help. But yeah, at this point, I think we have an underperform rating on both names, and the reason for that is any scenario right now, unless we see some changes from the FHFA, which is their regulator, results in pretty significant dilution to the common stock. But there are some ways that they could do this and maybe make it a little more favorable for common holders. But that's the reason we had the underperform rating on there, is we feel like anything to start to recapitalize these companies and separate them from the government could potentially be dilutive to the current common shareholders.
I think Bill Ackman might be one of the larger investors pushing this. But anyways, we've been on the line with Jay McCannless. He's covering the home builders and building supply companies over there at Wedbush Securities, joining us here on PreMarket Prop. Jay, always a pleasure. We'll dial you up again soon.
Thanks. Have a great one. Appreciate it.
Thanks, Jay. Go into the CNBC interview here right now, which is a big one here. Fed Governor Christopher Waller is on CNBC right now, and he is giving clear commentary here. He says we should cut at the next meeting. We know he was a Trump appointee. We know he is probably the lead candidate to replace Jay Powell as well. So it's very important. Obviously, when this guy talks, the market is going to listen. Nothing market moving here yet, because we've already priced in a 98% chance that we're going to cut the next meeting. But it's giving us more confirmation that, hey, cuts are coming here. Tariffs, just giving us some other comments just from it in the background here while we're obviously with Jay on. Tariffs aren't going to cause long-run inflation. I mean, the dove of all doves here is all dovish comments coming. We know we'll have a blip of inflation, but it won't be permanent. Inflation expectations are anchored. So they're saying, well, if we get this pop up 15% on all these products, it's just a one-time deal. So they'll all pop up, and then that'll be it. We'll just eat another 15%, and everybody will live happily ever after. Well, you can go with that, and that's what he's going with. So, I mean, we should cut at the next meeting is probably the biggest headline here. They're cutting, man. Like, it's over. Like, it's like Trump won. I already said that. Trump has won. It officially was when Powell gave his speech the last time, at Jackson Hole. He has officially won. So rates are going down. They're talking about even speed of rate decreases here. Waller was mentioning here. Just trying to dig deeper into the comments.
Markets kind of numb to this. It's kind of numb.
I think it's kind of all priced in. That's the problem. It's like all of this. If this was out of the blue and if we really expected, we didn't know where they were leaning for September. We already know they're cutting. So, I mean, it's there.
Not much going on. Still holding a majority of the gains, and looking at the two big guns, Apple and Google, still holding their gains as well. So they'll be the key drivers early in the session. As I said, we're off to pre-market high by 13 handles, getting half of that move back. So important day for the bulls. I mean, with this kind of start, I think, in the price action yesterday and the nervousness in the market, I think the bull, keep us green today. I mean, we don't have to be up 70, 80 handles, but would not like to see us give these gains back. But so far, solidly in the green.
Yeah, it would be an issue. Like, we obviously want to hold up, and if obviously Apple or Google start to leak, that could happen here. Ratings. Let's go to the ratings parade. There's lots of ratings. This is historically one of the bigger ratings days of the year. Analysts obviously coming back from Labor Day holidays, writing their notes, getting them out. Tuesday and Wednesday, usually of this week, are big ratings days. We have had lots of ratings coming here overnight. I'll give you some highlights here. We got Bernstein upgrading HUBS to buy. We've got Baird upgrading BWA to buy. We've got Redburn upgrading Chipotle. There's an interesting one we could stop at for a second. CMG to buy. CMG obviously has been in the gutter, hasn't had any love whatsoever. We do get an analyst giving it a little bit of love here this morning, buying the dip on CMG. Is that something Mr. Elconin is interested in doing?
For years, a long time ago, I went and got a burrito there. And I paid like $10, and I didn't like it. And then a couple months ago, I'm like, you know what? I gotta give it another chance. And I went, and I paid $15 for a burrito.
Of course he did.
And I didn't like it. I don't like it.
It's over for you.
It's over.
There's so much competition here too. Like, I mean, let's just talk. Like, Chipotle was one of these Mexican girls. Oh, this is great. There's a billion different Mexican grills now out there. Like, I ate at one on the weekend. I was in small town of Stayner in Ontario, and it's a no-name burrito place. It was awesome. I was like, my kid got a $6.99 burrito with, like, they gave her a drink and everything. And I mean, we went in there, me and the two kids went in there for $40 Canadian, which is like $28 US, $30 US, and we were full, and it was great. And I mean, this is the problem with Chipotle, is competition has come for them now. And what you see here is that multiple contraction that inevitably comes for every single food stock, restaurant. I know they're sexy when they come on, they trade 100 times earnings and 150 times sales, rather maybe not that. But I mean, now you're seeing the multiple contraction. PE on Chipotle was 50 forever. It's down to 36. But it's still not down in the 20s where a lot of other restaurants are. So, I mean, that still means the multiple is too high. So this isn't so much of a Chipotle falling apart story. It's more of a story of competition has come, and now they're realizing that, hey, this isn't Costco that can just carry a 50 PE forever. This Chipotle, it's a restaurant spun off from McDonald's, and now there's a lot of competition there. So competition equaling the multiple contraction that we're currently seeing, and I think the stock eventually goes lower.
It got lambasted when that Brian Nickel went over to Starbucks, and it rebounded from that. I believe it was this big red candle last year. What month was that? That was back in July of last year, and it's just, I mean, Where's the AI in burritos? I mean, I'm not going to give it, any comments. I will say that, we had the options analyst on from Piper, Danny Kirsch, and he made a fantastic call on this stock and Kava, and his stock got off the ground. Danny, tune in next Monday because Danny's going to be on
Yeah,
again.
he said short it on the
Yeah,
report.
he
was
flat
right.
out, man. He flat out said so. Will be interesting what.
Well,
he has to
Kava
say.
is 55 times earnings here now too. So I mean, it was 80, 90 times earnings. They're like, oh, the growth rate's there. Well, the growth's slowing a little bit. You know what happens when the growth slows? Multiple contraction as quickly as he possibly can, and that's what we've seen in the last year for Kava. $175 back in October a year ago. We're $172. Sorry, $172 and now $65. It's still trading 55 times earnings. They better start picking up that growth rate because that means a $40 stock could be in store if they don't.
All right, that's really what the other ones.
Earnings valuations don't matter when the growth rate is awesome and the retail trade is on it. It absolutely matters when the growth rate starts to slow. That is the problem. Bunch of other, so Wynn Resorts upgraded at Argus, WYNN still continuing on. CMI upgraded Melius. Tech Resources upgraded UBS. Valero upgraded B of A. I mean, there's just a bazillion ones. Nokia got upgraded at BNP Paribas. Alibaba gets upgraded here. There's late Johnny come lately. Arete, if I'm saying the right, boutique firm upgrading Alibaba seems a little bit late there. Those are the upgrades. If you want to talk any of those, feel free. I want to give you the downgrades as well. Just quickly, just going through them. And chat, if you guys want us to stop at any of these, let us know as well. We've got downgraded. There's quite a few of these today here too. Citi downgrading ASO. That's off their earnings yesterday. We've also got Truist downgrading Six Flags. They don't like to have any fun. B of A downgrading Philips, PSX. We've got BNP Paribas downgrading Constellation Brands. That's off yesterday's disaster, and STZ was a disaster yesterday here too. And let's stop there for a second because Constellation Brands. What, does nobody drink anymore? What's happening here? This is an ugly story. Is this a Buffett stock? I think this is a Buffett stock too. Man,
no, is it? Is he?
I think it is. But can we get confirmation? Warren Buffett and Constellation Brands. I think he is.
How about the dog of dogs, Samuel Adams? Or
well, we just talk competition coming all over the place here too. You know, you've got all these, different companies now, obviously, all these small microbreweries and all these other, liquors that are coming from all different smaller places. There's competition, a lot of competition here. But the earnings, so the catalyst from yesterday was they updated their earnings and they were lowering it to 11.30 to 11.60, and they were up at 12.60. So they lowered by $1. You can't lower guidance. So nobody likes that at all. So with cut guidance on weaker beer demand is what we're citing here too. So beer sales drop off. Modelo, Corona, parent stock dives 5-year low. So that's your headline there.
All right, trading down $1.34 right now for Constellation Brands. We did get a bounce a little bit. Did we get a bounce? We got a green of all the action yesterday. You did end up with a green candle just based on that open. But what the bulls need to do here is defend that low from yesterday at 149.36, close of 151.26. So 60 cents off that low if you're looking for a potential double bottom here, Constellation Brands.
All right, folks, we are about to wrap it up here on Pre-Market Prep. But first, I want to say thanks to our sponsor, Hive. This show is brought to you by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly 0.5 gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. There is a little overlay that I am about to put up right now. You can scan that QR code if you want to learn more about Hive. But also, we're going to have Frank Holmes on tomorrow, I think, to talk a little bit more about Hive and the sponsorship of Pre-Market Prep.
Let's move up. Go back to the chart on Hive. It's starting to move up here a little bit. No position for any of us here, but it's starting to show a little bit of life. 3%. It's up this morning here. So Hive showing a little bit of life there.
Yep.
HIVE. Okay, we're heading over to the Stock
Bitcoin.
Trader Network, STN room. We're going to be covering all the imbalances. We'll be covering all the relationships, all the ETF effects in detail. And if you want to get on this stuff live, if you don't want to wait till 9 a.m. or 8 a.m. to hear on the ETF effects, you could have heard it all last night at 4 o'clock before it was happening, when we're warning about these ETF effects, because, you know, it's just math, folks. It all adds up. So if you want to do the math with us, come over to stocktradernetwork.com, do your trial here. We're going to go over and try to make some money.